Let's look at another example. Lender mails disclosures on Friday, August 7th. Day 1 is Saturday, August 8th. Day 2 is Monday, August 10th. Sunday is not a mail day nor national holidays, so they don't count as business days. Day 3 is Tuesday, August 11th. Day 4, is Wednesday, August 12th. We can now collect the fees from the applicant and then order these services with the appraisal. And again, we're going to wait for the appraisal through the appraisal management company, which again delays the process some on conventional loans. Okay, if the annual percentage rate changes in the process by more than 1/8 of 1%, guys, that's not 125, but it's 1/8 of 1%. Okay, on a fixed rate loan, or 1/4 of 1% on an adjustable rate loan, a new truth in lending statement must be reissued. And again, we have to wait 3 business days before closing can take place. So I can almost guarantee you on your transactions that things will change. Now remember, the tolerance is 1/8 of 1% on a fixed rate loan, up or down. I'm really not sure if somebody's going to try to enforce the annual percentage rate going down, but technically, if it changes within that tolerance in either direction, redisclosure is required. Okay, so here's some examples of what may force an update on the truth in lending or the APR. These things never happen. A loan amount changes. A borrower decided to put a larger down payment down. Had that a few times. Somebody's decided to borrow a little bit more because they wanted to buy a big, sofa or something, or they need to get a car after the fact and was going to save them money to do that. If a loan changes the terms from a fixed rate to an adjustable rate loan or adjustable rate to a fixed rate loan. If a closing date changes, and you're probably saying, why is that? Well, we've got most mortgages, as most of you know, because y'all like to close loans on the last Friday of every month. We are due on the 1st, so we collect interim interest from the closing date to the end of the month so we can get the folks into the cycle. So if a closing is moved from a Friday, say, to a Tuesday because we're trying to accommodate the schedule of some movers, that will change the APR related to the finance charges, and it will probably trigger a change in the APR by more than the tolerance, meaning that we are now required to redisclose and wait the 3 days. If a seller's closing costs are being changed, what the seller's paying towards the purchaser's closing costs, which sometimes we'll see in a transaction where the seller's now agreeing to pay an extra $500, $1,000, or whatever it may be towards the purchase closing costs, that changes the amount of finance charges that the purchaser or the buyer is paying, which would make a change to the APR. And if some of the charges from the title company change or not what we had estimated, the borrowers decide to use some title company we're not accustomed to, that would also make a change to the APR related fees. Again, if any of these things are done and the APR annual percentage rate change is less than 1/8 of 1% on a fixed rate or 1/4 of 1% on adjustable rate loan, then we don't need to start the 3-day rescission period. We can simply issue a new truth in lending statement and have the borrower sign it at the closing table. And here we go, we're restating that. Absent a proof of receipt, remember, if the person opted out from electronic disclosure, especially, or we're working with some investor on a brokered loan where it was being mailed out and they want 1 or 2 days to mail, we have to wait till the 3rd business day after mailing to be able to close. So again, this can delay things. And let's just kind of take a look at a calendar. Let's say an application was taken, let's just say it was taken over the weekend, and a truth in lending statement what was being brokered was being mailed by our investor on Monday. We've got mail days 1, 2, and 3, and it's received on the 3rd day. And so on the 4th day, we are actually able to get a hold of the customer, and it was early enough today to get the payment information for the appraisal, and we were able to do that and order the appraisal. Typically, an appraisal takes a week. Now, we'll tell you on conventional loans with these appraisal management firms, they seem to be taking a few days longer. But let's just assume the best here. That appraisal came in at 9 o'clock at night. and had a realtor, I don't think so on this particular call, was on one earlier today that we had talked at, and we saw an appraisal came in at 1:58 in the morning. So appraisers do work weird hours sometimes. And it comes in at 5:30, and so our processor does receive it Monday when he or she comes in and gets the file back together and the pieces together and submitted to underwriting on the 19th of August. And we are now allowing a 7-day turn time on underwriting, which is kind of middle of the road. We're doing some conventional loans today a little bit faster, and FHA loans probably a little bit slower, and VA loans slower. We get a underwriting approval that afternoon of the 26th. The processor has to collect a few items and is able to resubmit things on the 28th to get our conditions removed. We're already moving into the next month here, guys and gals. We do get final underwriting approval now on Wednesday the 2nd. There were some changes that were made for whatever reasons, or we just got the title package in from the closing agent, and we realized that on Thursday when we got the preliminary information from the title company that they changed their closing fee from what we had estimated had gotten from them before. So again, our compliance folks again are reissuing truth in lending statement. We missed the mailman because it's almost 5 o'clock, and it's not mailed or created here. It's not mailed until excuse me, folks, until Friday the 4th. And it's mailed on the 4th. And again, in this particular case, it wasn't created. It missed the mailing date, and it was mailed on Monday. I apologize. On Monday. And again, we have got 1, 2, 3 days for mailing, and we can start our review day. And we were reviewing it on Friday really hard, Saturday really hard. And you know what? We can't review it on Sunday. We tried putting it under our pillow and everything else. We just can't think on Sundays. So that doesn't count. And on Monday, the 14th, we are able to close the loan as that's the 3rd day. So let's go back and take a look here. We have gone 1, 2, 3, 4, 5, 6 weeks to closing. So we're looking, truthfully, a lot of times now at 45-day lock periods, possibly 60 days in some cases. Now, the use of electronic disclosure, and if Trustmore is acting as the lender on a transaction, can greatly change things and reduce these time frames by weeks. So that's important to know that we want to encourage folks not to opt out of the electronic disclosure. All right, so now I'm going to give you all a chance to ask some questions later. Here are some of the frequently asked ones that we've seen. How do the new requirements impact applications prior to the effective date? Again, it has to do with application date, not the date of closing. So right now it's not impacting any loans in the pipe that are closing this week. And again, as long as the initial application date was the 29th or earlier of July of 2009, there's no impact here. The final truth in lending statement must be received 3 business days prior to closing. Is that 3 full days? Yes, it's actually 3 business days. Remember, Sundays don't count, or national holidays. We can't think on those days. However, unlike the initial disclosure, we can actually close on that 3rd business day after receipt. Can the credit report fees be collected at the time of pre-qualification? That's yes, and again, I want to state right now at this time, Trustmore typically does not collect for credit report fees at time of pre-qualification. Many lenders do.